All right, if you saw my last video of how we were going to take this GBP odds trade, this is the update for it. So right now it's 4:29 p.m. I think the market closed, right? Yeah, the market closed. So this week, this was my entry right there. So I am up 396 pips on it. So it should start going up towards that. Oh yeah, I actually put it stops at break even and took I took like half the trade off the table. So it's like a risk-free trade at this point. Let's see what happens next week. Cause yeah, there's an area right here, probably on a lower time frame that might be a supply on a lower time frame. But the way the pound has been looking on GU and uh, G New Zealand and stuff like that, the pound looks like it's ready to at least make some type of pullback. Not a recovery. If it was going to recover, then that means, well, we don't know. Maybe it will. Maybe it will. Maybe it won't. But the pound looks like it's ready to recover against Australia and New Zealand. Yeah, see, New Zealand is trying to come back up here after it tapped this zone and dropped and made somewhat of a demand on a lower time frame. So it's just stuck between zones at this point. But I feel like it will shoot out of that and come get this liquidity up here before it drops. That's just what I'm looking for the pound versus New Zealand and Australia. It's what I would call its sister currencies because again, uh, Great Britain owned Australia, New Zealand, and Canada at one point. So pushing up against it. I also talked about Euro AUD. I talked about it, but Euro AUD is at a point where it could possibly drop. And when I mean drop, this could drop off this supply zone after breaking the trend off the supply zone. All week it's been stuck. So it's very interesting to see what Euro AUD is going to do. It might drop and GA might go up because the corporate between Euro AUD and GBP AUD is Euro GBP. And Euro GBP, just as I suspected off of this move that I put on, I gave this setup to someone, I forgot, and that's exactly what happened after it was on the H1. After pulling up a little bit and coming back to this zone, tap, tap, drop, TP smashed. Right back down to the lows, took out those lows where all the money was at. Beautiful trade. Very beautiful trade. Indeed. And honestly, it's probably got more dropping to do because if you come over here on the weekly, after we can just take all this off now. When it came and took this liquidity at this top, because it's been ranging. Think about it. Let's see. It's been ranging since 2017 in this little area of arrangement. So all it did is come to the top of the arrangement, tap it, and then drop. This could possibly go back down to the 83 area, maybe the 82. And if it breaks the 82 with this gap that needs to be filled, it could possibly go all the way down to 76. Now, the interest rates is actually in favor of a sale. I think Euro's interest rates at 1.25%, while GBP's is at like what 2.5%. So interest rate wise, we are talking down, down, down. More drops to come. And usually when when you're selling Euro GBP, you'll get a beautiful, nice little swap fee if you were swing trading. Like anyone that sold right here, all my swing traders that sold right here, they have beautiful swap fees that are coming in and filling up their account pretty nicely. Because I don't know if you understand this by now, you probably go against the interest rates, which is okay. I mean, if it's going in that direction, it's going in that direction. But if you're going in the direction of the interest, the broker has to pay you swap fee, positive swap fee every day for the position being open, which is pretty good. The higher the lot, the more the swap fee. and that can make a good difference on your pockets, especially with higher with actually bigger accounts and stuff like that. So with that being said, since GBP is smashing euro, I don't see euro AUD going back up as much. Um, Especially, when you see a candle like that come and then this candle pushes up a little bit and start coming down, it's like a break and retest type deal. And like I said, all week it's been stuck at this 15353 area. This could tumble all the way down. So this could be another setup. Obviously, you see I'm paper trading it, but I actually have that position open as the market closed. This could drop down. As Euro GBP drops, Euro AUD will probably drop, but GBP, the pound having better interest rates against Australia, and I'm already closed half the position and I'm, up a couple of pips. I'm not too much concerned about this trade. I'm gonna let this trade ride, and I'm gonna be looking for more entries when the market opens back up on this Euro AUD dropping down, I guess on the H4. Yeah. And usually you see these things trending up like this and fails to make higher high, especially on the supply. And then next thing you know, it might wick out one more time and then plummet. So that's what I'm looking for Euro AUD, obviously. One more trade that I was looking at was USD CAD. What was it, on the daily or the weekly? We had a beautiful wick rejection off supply. I think it was the daily. Yeah, we got a beautiful wick rejection off supply, and then it sat there for a minute. And once I saw the bearish engulfing candle, it was the bearish engulfing candle let me know it was trying to go back down. At one point, it was, see, when it went down, and then the next candles tries to fill in gaps, but I think it filled gap right here where there was a supply zone on a lower time frame. Yep, right there. So it came to this supply zone, tap, 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 drop. Entry was right there. At one point, it was like 214 pips move. Now keep in mind, I put small lots in, so it's not like it's big giant money and stuff like that. But even practicing with a 0.01 swing trading, eventually when you get your nervous system together, because that's what tends to happen, your nerves are all tied up into trading and everything else in life. Once you get your nervous system ready to do the stuff that you want to do, because you already know how to do everything, your nervous system's just not prepared. So once you get prepared to take in some of these trades and stuff, oh man, you'll just put it in and come back and look at it week by week by week by week and just see what happens. So that's what I'm seeing. I called this because I was looking at the CXY, which is the Canadian index, and we do have a demand right there. And I remember calling this during the pandemic when I saw it came to this supply, and it tapped it, and then it filled in this whole move. This was a deep trend. I don't know if you guys were trading back then, but this was a trending for a very long time. Canada was kicking the dollar's butt, but when it broke this trend line, it came back up to this supply right here, a bigger supply. I hate them on the higher time frames. They're so big. It tapped it, and started failing to make higher highs. And that's when you knew that this whole move was going to get filled in by this big drop, which made USD CAD fly to heaven. Because this is the complete opposite of USD CAD. I don't know if you ever come to see these indexes. If you look at the CXY, it's USD CAD backwards. So look at USD CAD. You see it? See this move? And coming up to here. Now look at the CXY. Complete opposite. And you can use the XYs, and the dollar looks like the euro. The way this is coming up like this, if you go to Euro USD, complete opposite. So if you use the dollar index and the Canadian index and all that to trade off of, understand the interest rates, I look at technical and fundamental. If you understand the interest rates are in favor of sells, then you should be looking for major supplies to sell off of. If interest rates are in favor of buys, you should be looking for a major or a demand to buy off of, because supply and demand is the bank. It's supply and demand in a fundamental way is an order block, and an order block is just a block of orders where the banks put their limits at, their limit orders, like sell limits and buy limits. And when it wicks up into it, it activates those limits. And obviously the other side, the bank will try to stop it. But if the interest rates are in favor and it's time to drop, it's just time to drop. This whole drop is because it keeps coming to certain areas where order blocks are at and just smacking them. Like, look at it. Look how beautiful this is too, by the way. I love how the candles break. Order block, smack. Order block, smack. Order block, smack. It's probably smacked it. Yeah. Order block, smack. And it's trying to come back up to this order block. As long as it keeps making lows, it sells all day. Now, it failed to make a low right here, but it won't start an uptrend until it breaks this order block. And it ain't going to break this order block too much unless the interest rates for the euro change, or, well, not even for the euro. I mean, yeah, yes, the euro. If the interest rates for the dollar and inflation, because inflation and interest rates makes the market move. So if the interest rates and the interest rates and the actual inflation starts to see, it broke out of the channel too, but that don't mean nothing. So if the interest rates and all of that stuff starts to change, you'll see the candles start to break these supplies, and it'll start creating something like this. Let's just say drop, and then right there's a demand anyway. So if it taps and then it breaks, and it pop right here, and you get the little sell, and it sit right here, and it start doing this. Once it start doing this, interest rates are changing. Now we got the uptrend. Now we got a new channel to play with. Now we got demands. Now you're buying all the demands at this point. Bull. Demand that'll come pop up right here, and there'll be another demand. Now we're starting to come up to an uptrend. And honestly, if this does happen, its next destination will be coming all the way back up here to break. Because when it breaks a channel or breaks a trend, what price loves to do, especially if you got in, let's say you got in on this one. We got in on that tap. You best believe targets will be 14433, because that's where this trend started. So there's liquidity. So look at it this way. I know this is a lot. I'm trying not to make it too nasty. There's liquidity sitting right here. Because you know why? Somebody did this. A lot of y'all did this. Too many people did this. And y'all put y'all stops probably at break even, or your stop loss right here. So it's a whole bunch of stop loss and money sitting right there. So this could come all the way and wick all of y'all out. And then from that point on, wherever it goes is wherever it goes. It could continue the downtrend or whatever. But you've seen it so many times. Prepare your eyes for stuff like this, and prepare your mind to just get in the trade and just walk away from the market and come back and be happy. Some of y'all like 1 or 2, 3 or 4 psychological steps away from being profitable. It's not that hard, especially when you get the system down. Once the system get down, if your psychology in the way, you need to really work on that. And I mean, like, develop your psychology like you develop the video game character. Stop developing the video game character when you can't develop your own self. So it is what it is. Make trading easy, man. Trading is easy, man. Trading is easy. Once you got a system down and your psychology's together, it gets easy. Yeah. Now look at this as art. The printing of candles is just art to me now. A symphony. But that's all I got for you. I will see you on the next video. Peace.